founder of XoxoDay, and we invited you to do a TED-style talk at the Bangalore Tech Summit last year. And when you did this presentation, I actually responded afterwards that it was $1 million presentation. And what I meant by that, and it's actually true, if you're a SaaS provider and you're looking at building out your business and you want to know what's successful and what's not, what has worked and what's not, your presentation was actually worth $1 million, because the lessons learned and the success factors that you shared, I think, were so insightful and so valuable. And that's why I wanted to invite you back onto our platform to share it again with a different group of stakeholders. And so really, thank you so much for joining us today, taking time out of your busy schedule. And with that, sir, over to you. I expect a 5 or 10 minute sort of presentation, then we'll have some questions, and then we'll turn it over to our second speaker. Over to you, sir.
Thanks, Jay, and good evening, everyone in India, and good morning, everyone in the US. I'll spend, say, 5 to 10 minutes sharing some of the learnings which we had across our journey of running this startup. And whatever I'm sharing is not really out of the box, but these are very common things. But sometimes while we are running our day-to-day business, we sometimes ignore these things, and then they can be really costly for us. I'll share a presentation and walk you through that. Can you see my screen?
Yes, we can. If you make it enlarge it full screen, please. Perfect.
Yeah, so what I'm talking about is that any technology product, the returns diminish every month. So something, whether it is a hardware or a software product, most of the times the returns from that particular purchase, they keep reducing, and then I'll discuss why they are reducing, and then in such a scenario, how can companies really navigate such an economy where the returns are diminishing every single day. So the marginal utility for most of the tech products is decreasing. I'm not saying every tech product, but most of the tech products, the marginal utility keeps decreasing. A classic case is the iPhone. The old iPhone versus the new iPhone, the differences are not so much, but you still see how the value diminishes so fast. A new iPhone, I mean, it will skim the market at very high price, whereas the exactly similar model which was there just few days back, the price reduces drastically as soon as a new model is launched. And then same happens with a lot of other technology products, whether it is a software or whether it is a hardware. Now, the world of softwares has been changing very heavily, especially in the last, say, 2 decades. If we talk about the early days of softwares, it was a very sellers-driven market where the buyers were really looking to buy these products because they were facing problems, and there were very few sellers. I mean, there were very few software companies. The entry barriers for a software company were very high because you had to develop everything yourself. There was no simple code libraries, no code, low code, the servers, etc., etc. So the entry barriers very high, and hence the number of players were very low. The differentiation hence was very high. So two companies used to differ very heavily in terms of the value they were giving to the clients. So the clients were able to differentiate between products, and the vendors were able to kind of show the differentiation. The number of users or the number of buyers were very less, and the total cost of ownership was very high, very high. So net, it was a vendors market. I mean, they were enjoying the revenue, and they were enjoying it very well for a long term. Now, if we talk about the software world today, it is a very buyer driven market because every buyer has so many options for every possible software. The entry barriers for a new software are very, very less. I mean, today it's not about the complexity of building a software. So for example, ChatGPT or OpenAI, it came into the world just few months back, but we are already seeing there are some companies from China who are working on it, companies from other markets who are building, and somebody will build an exact replica of ChatGPT. So the entry barriers are very, very low. There is a fatigue of sameness. So every product looks very similar, and every product is, or every industry in the software side is moving towards commoditization, because every software starts looking the same in terms of the value, in terms of the features, within few months. The number of users are very high, and the total cost of ownership for the buyers is much lower. And hence the software world in terms of the vendors, so the vendors are losing their say in the market. They are finding it very tough to compete, etc., etc. Now, what are some of the growth levers for companies who are doing software or SaaS today and maybe in the future? So these are some of the growth levers which have worked well for us, and I'm sure that they can work well for a lot of other companies. So number one is democratize the reach and ownership of SaaS or software. So in the world in 90s, we were all thinking about enterprise B2B. I mean, there was nothing called SMB buying softwares. It was all meant for the enterprise B2B companies. And then somewhere around 2000, the first decade and so, SMBs also started adopting softwares. And if we talk about today, it is the end users, the D2C and the B2B2C. So what I mean to say here is that every company who is trying to build softwares should be thinking that it is neither a B2B enterprise or an SMB. It is more to do with the end users, because that is the influencer, that is the real buyer. The second one is whether you are doing a software, but try to leverage the end users by doing some commerce, which is what I mean, a lot of investors, including Anderson Horowitz, once mentioned that every company today is a quasi fintech company or is a quasi commerce company, because everyone is trying to leverage the end users and then trying to capture the end users revenue, the end users wallet. Because if you have that, then you don't only depend upon the license revenue, but you can also get a lot of end user revenue. And this kind of strategy works very well in a slightly slower market like today, where most of the companies are cutting down their software expenses. But if you have a very good end user base, and then they love your product, and then they are also doing some transactions on your product, then you have a great strategy. The third one is, I mean, if you sell it yourself, it is very costly sale. Your CACs are very heavy. So how can you leverage partnerships, integrations in a very, very big way? Because every software has some natural integrations with other software. So how can you bundle them seamlessly and give value to the users? Because users are also looking forward for connected softwares, so that they don't have to use maybe 10 softwares for a single department. I mean, how can they use maybe one or two softwares which are very deeply integrated or interconnected with each other, and then hence you can get higher value, and your friction reduces in terms of buying your software or adopting your software. And the other one is how can you build self-serve products? Because again, you are talking to the end users. Again, you are talking to influencers because it is not only a CX or the leadership team who is looking at your software and buying your software. It has to be influenced by somebody. So how can you reduce the friction to try out the product and try out and then give value very soon rather than going through the enterprise cycle, setting up the demo, taking 30 days just to give the demos and so on. So the 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 bottom line is that most of the companies should start thinking that it's neither a B2B or a B2C in your software strategy. It is basically a H2H or a human to human sales. And if you start doing that, then you start looking at various growth levers which were just kind of ignored or which are just in front of you, but you are still kind of not using those growth levers. So this is what I just wanted to share a very short note. And then we have been using some of these strategies extremely well for our own business. And we do a B2B company, but a good amount of our revenue mix comes from B2B2C, and that works very well. Makes a very good vicious circle. The B2B2C guy influences the B2B and so on. So it works really well in terms of the ripple effect of the revenue. So this is what I wanted to share. Happy to take any questions.
Thank you, Manoj. If you could stop sharing your screen, that would be great. So I want to see if any of our members have any questions. Two things jumped out at me, and so thank you. I thought slide 3 was really interesting. One is I sort of internalized that when I use some of these SaaS applications. When I hear you talking, I'm like, oh, I see it happening in the products and services that I use. Your slide 3, beyond having a number of partners that are USIBC members, that's a plug, of course, and maybe a few future members if you want to make some introductions. But all joking aside, my question is how do you find the right partners? So if there are people on our platform that think you're the right fit or vice versa, how do you actually make that connection? And then beyond just making the connection, how do you optimize it? And before you answer, if any other members have any questions for Manoj, if you could raise your hand, that would be great so we could follow on. Over to you, sir.
Yeah, so one is you need to get your discovery very right at every touch point, whether it is your website or your product itself. According to the use case, for example, if you are doing a software on HR tech, then you have to naturally open up your integrations with a lot of HR tech providers, whether it is a Workday or an SAP or a Bamboo HR and so on. Similarly, so for example, we do sales commissions as one of the softwares, and we have natural integration partnerships with CRMs and DMS and ERPs and so on. So that strategy has to be part of both product and sales. That how do you connect these softwares very easily, and at the same time how somebody in the sales and GTM team will connect with these partners, because you can then piggyback on their success and they can piggyback on yours, and then it is a win-win for on both the parties.
Great, thank you. One follow-up question, we all know the market is toggling a little bit from sort of, fast growth to more moderated growth. What are some of the trend lines? What are some of the segments that you're seeing in the SaaS markets, if I were to say in the next 12 to 18 months? If you could just sort of share your thoughts of where things are going in the near term.
Yeah, so every software will either help you increase the revenue or decrease the cost. I mean, that is the simple crux for any software. So whatever you are doing has to do one of these. So either whatever you are selling to the clients, it has to either help them increase their revenue or decrease the cost. So that is one trend line which I see, that softwares which are able to increase the revenue or increase their sales or reduce the sales cycle, etc. They are still working very well. Then softwares which
Do you
are
see in that balance, do you see a change from maybe a focus on revenue generation to cost savings, or is it always a balance back and forth?
So cost saving is a larger playbook right now, where companies are looking for products which work well for them to save cost or to give more value to their customers without increasing the cost. So those softwares are definitely much more in demand than the nice to have kind of softwares which can be easily replaced for few months and then so on.
Wonderful. Thank you. Well, thank you for your time today. Really appreciate it. If anyone wants to meet Manoj or learn some more about this area, let us know. Manoj, if you share the slides, we'll make those available for our folks.